All right, guys, how we doing? Happy Tuesday. Here we are, the 13th. It's now coming up on 11:30 for me. So great participation today. Now, just as a side note here, so members know this is coming. What we're going to do here, we're going to start live streaming this. Now, of course, we'll keep the structure here in that members, of course, can post up their content. But we're going to make this public, the review of the content public. And I think what we'll do is we'll give those that are watching an opportunity to participate. We'll structure it here so that if they want to participate, they can. It won't be the same as being a member, but there will be some more exposure here. So you can look forward to that. Monte Crypto and I are kind of working out the details on that, but that should be going live here in the very near term. So I'm going to make this public today just so some of our YouTube subs can kind of see the format that we do here, because right now we're posting just Bitcoin Friday. We want to get a little more participation in some of our YouTube subs to see how we approach this and perhaps get some new ideas and just some more exposure to people that are out there looking for education on how to approach some of the TA that we teach. So with that said, I'm going to start up here. I've got Mr. Jack 245 with just an absolutely beautiful chart here. So Mr. Jack, this looks great. There's not a lot of comment for me to add here. So you sent this to me on a 4-hour. This is Lending Club. Now you could probably count this a couple of different ways, but you would get to the same conclusion here. So when I first brought it up, I just see triple bottom. I would have done it this way: 1, 2, 3, 4, 5, but it doesn't really matter, right? So you end up at the same place. So here's the 1, perfect little front run on the 50. You come right back to the consolidation here. So that's pretty much where you would anticipate that you might see a reaction here. Longs, right? Those breakout traders that took it when it comes back, they're going to defend, which they did. Now, as we get here, and then you had RSI almost get to 30 here, but then a pretty good rip off of that. So that's look at that and you say, oh, okay, great. In hindsight, oh yeah, that's easy in hindsight. But really, when that was coming down here, if we open this up, let's go to an hourly here. I would have done this, right? So it's not uncommon for the prior 3-4 to be a place where you might anticipate a reaction here. So looking at that here on the hourly, now the one thing you don't have here, let me just throw it up, is volume profile. Well, we can go visible range here, that's fine. Now I got to tweak that, so give me just a sec here. That's not enough detail here. So let's go to 100. We get a little better detail here. So now it starts to make sense. So you pull that over, right? And you say, okay, well, if I'm anticipating where I might find some support, that kind of makes sense. And then tie it into the prior 3-4 and front run on the 50, and you've got algos participating here. So now as you've done it, right, just bring it up here. Okay, so little front run on the 50, very common, right? They're not going to make it easy for you. So often you'll see it both at the golden zone and the 50. There'll be a slight front run, just as we saw it in Bitcoin, both the golden zone and the 50. So you go rip, barely pauses here at first target up to second. Now we didn't quite make third, which makes you think, right? That's all the more thinking, oh, okay, looks like 1, 2, 1, 2, right? So you're right on, Mr. Jack. This is really good looking work. Now down at the hourly here, if we open it up and look here, tricky, right? So that's I think did you have it labeled? Here, let's open it up so we can see it. So again, in the interest of trying to keep it simple, okay, I got 1, 2, 3, 4, 5, right? So 5, I got a little 3, and then I get just this waterfall, right? So there's not much you can do about that. I mean, if you were looking for the buy, that's so extreme so I wouldn't have been there looking to buy that. Although you can kind of make the same argument here. We're coming back towards the 1. Some of this structure, if you pick that up, I'd have been looking there, but I would not have been one to just sit there and try and catch the falling knife. So unfortunately, it's gotten a little tricky here. So this would have been a difficult trade to make. So if you thought, oh, there's the 1, well, we don't get far enough here on the A, so that might have given you a little pause, say, is that my correction? Then we come out of this, you don't get a 5, you get a 3. So what you're thinking here is that we've gone 1, A, B, C, get an expanded B, we come down here. It's just spot on. So members or any of those traditional traders here looking for a trade, which is a lot of the benefit of what we're doing here. So not only is the idea to review and for us to get a feel for how your technical skills are progressing, this is a great filter for other like-minded technicians that you would find amongst our membership here that are analyzing the market the same way. That they're kind of, it would be like a scan, right? So you've got all these people scanning the markets looking for a setup that would appeal to your technical approach to the market, and that's what you get here. So this is literally, take it right now. I mean, the other kind of obvious pivot is right here, right? So we're working off of the 1. So we have structure here. We've got this pivot structure. We come right to it now. Oh, you're a little skinny here, right? It's a little bit hard to see him. Make it a little bit fatter here. So length, let me get that right on the pivot. Okay, so what's interesting here, now if you take it off of the 1, right, which you could certainly. So now we're right at the 618. But remember, an algorithm doesn't give a shit about Elliott, right? All it's doing is taking swing high to swing low. So it's even sweeter. So as we come down here, you would want to look at it both ways. I would, right? So if it had gone through here, I would have gone back to the 1 and said, okay, let's see how I look at the 1. But because an algorithm is just going to work with the most recent pivots, the structure here is so good. Now, additionally, what do we get here, right? So anytime we've got a golden zone here where we're not like right here, we get a golden corner, which gives us, so you see you've got a little channel on this, but as we set this up, so now we get an 80% probability of our target, right? Now, again, I always have to remind people this. 80% is not 100%. Right, so you can't just go balls deep here. This is a great looking entry, and the reason we like the golden zone is because the risk to reward is so good. So even if we just tee this up, I mean, this is just, as I will often say, why would you not take this trade? Right, on the assumption you've got capital free, you're looking for a trade. It couldn't be any better. So what do we get there? So we get 3.82 to 1, and that's assuming all we're going to get is first target. Now, if this goes fully to the 618, right, as you have marked here, Mr. Jack, well done. Well, now we're at 7.77 to 1. Right, so what you're anticipating here is that we're going to get an impulse off of this. So never first click, right? So if we went here, that might be the 1, right? And maybe you get something like this for your 2. Now it's a rip. So if you're uncomfortable taking this, so for me, I wouldn't go 100% here, but I would. You can be aggressive here, right? It's so good technically. But if you got your 3 to 1 here, right, I might take some profit there and look to reload as we come back here. And again, we don't have this, we don't know what's coming. But if we were to see that scenario play out, well, now you're looking like that. Right, so the potential here for this to fully realize some of these upper targets, now you're at 11 to 1. Now, a lot has to happen, and that could take, we could be well into the summer before that's happening. But the setup here is spectacular. So you're risking so little for the potential reward. It's beautiful, right? Again, why would you not take that trade? If you're looking for a trade, I don't know you're going to see one any better than that. Now, and look right here, now we're at a little low volume node, right? So bring it over here because there was very little market acceptance here. Now, again, it doesn't mean that this is a guaranteed winner. So let's be reasonable here. There is no such thing. But the risk reward, even if you're just using a couple of ticks under the 707, it just doesn't get any better than that. I mean that quite sincerely. That's as good a trade setup as you get. So if you're looking, right, stop under the 707, all sorts of upside. That's a must take in my view. You could trade it in options as well, right? If you want to buy at the money calls, I'd give it minimum 90 days. Minimum, right? Because that could, again, you could be well into summer before that's fully realized, and you don't know how long that's going to take. But here's the first push that you're after. All right, so it's great work, Mr. Jack. It looks terrific. I'm going to keep moving here so this doesn't take 2 hours here. Okay, so let me pause here. I'll be right back. Okay, next up I got Pro 407. Pro 407, something went a little askew with what you sent me. So I got your screenshot of the Apple chart, which is certainly what you're looking for. But what you sent me when I grabbed the link and applied here is the Aussie dollar. So this must be something you've either been looking at recently, or it's part of, if you had it set in a quad or you split. You sent me the wrong one. So be sure, we learned this the other day with some members. When you're sending me your copy, make sure you save it as a dedicated chart layout. Make it, Apple, for review, or whatever works for you. So that way, you might have changed this to Apple and hit the link and sent it to me. But if you didn't save it, it's going to send me the old one. So now that's not necessarily bad news, because this popped up and I thought, oh God, this looks interesting. So it's not that radically different from Apple, actually, which is kind of amusing. But if you look at this, so here's just a little bonus for any FX traders. This is just beautiful, right? So we got 5 off the low, right? So here's the COVID low, 5 off the low of the Aussie to the dollar. We get a shallow 2, or, oh shit, it could be here, right? So it could be complex. So this could be WXY, right? Probably is, right? So not uncommon. In fact, incredibly common, right? Almost every pivot, every significant pivot in FX is almost always a double top, double bottom, because that's how market makers grab the liquidity that they want here, and they bait in short sellers and then rip it away from them. So, but that said, right, not to digress too much into that, that's something I've been over with members many times. So, but I'm just going to do this real quick. So, and then we got 5 up here, so it's not going to be the 3. So 1, 2. What a beauty here. So you look off of this low here and we pull it up, looks like a slight front run. That could be the 38. Oh, let's get the regular on. Maybe a slight run on the 50. Not bad, but then, so if this is going to hold as the 2 here per the ABC that you put in here, let me go down to a 1. Get that in a color we can actually see. All right, so if this is going to be AB and you finish with this nice 5, right? So then it looks like we've got to start on a 1, 2, and lo and behold, right? It looks like you've already got this, right? So you're already tracking this. Right, so there we go, right? So first, right, note double bottom. All right, so we go right into the golden zone. So what do you get? Golden corner, right? So we know we have 80% odds of getting here. Now, could be here, could be here. We don't know, but as long as this pivot holds, 80% odds. As I've said this a gazillion times, these are the best odds in trading, period. Now, add the fact that we have an algo participating here. Show me where else in the market you get 80% odds. Go ahead, I'll wait, right? Because there is nothing. Nothing. This is the highest percentage trade in the technically period. Golden corner, right? We're on our way. Now, again, that's 80%. It's not a 100%. So you can't just assume here guaranteed winner. The caveat is always as long as this pivot holds. Now, again, just as a reminder, if this pivot breaks, we can still maintain the corner here. It's just not a golden corner, right? So because we know there's an algorithm participating here. We don't have to wonder about it. We know it, right? So that's their target. So that's it. Okay, there's a little bonus. Now let's go over to what you were looking for, which is not so clear. All right, this is interesting though. No, many members have seen this before, right? So the COVID low, let me get that right on there, was a perfect tag of the 618, right? And the structure here. So again, so here's the first target, second, third. So you look at this. Now this is kind of interesting because at first glance, and let's see here. Pro 407, I've got your screenshot here, so I'm going to work off of this because oh shit, let's see if I can get this up here so I can review what you sent here. So give me a sec to bring this up here. Okay, so this is the screenshot you sent me. So you didn't, right? So I guess you're just, right, it's pretty obvious, right? We got an impulse here. Looks more like a 5 coming down, although there could be some complexity here. So ABC running flat, 1, 2, 3, 4, 5, right? That's clear as a bell. You almost can't miss it. Now, note we don't get the median line. So as a result of that, oh shit, can I draw on this? I guess I can't. Well, we'll do it when I bring it over to mine. So now note here, not making the median line sets up, right? That's trading principle number 4. Sets up a move equal to or greater than the move that failed to get there. Right, so equal to or greater than, we come right back down, damn near to it, and it looks like you're projecting we're heading down. So this is a bearish call on Apple, Okay, right. So, I mean, so certainly what's influencing your thinking is the 5 down here, and then we've got 3, right? So the assumption would be we're coming down for another 5. So technically you're spot on. Let's just look at a couple of scenarios here, because I'm assuming you're looking at this going, oh, here, well, let's see. I got to get a live chart that I can work on here. So if I fill this in here, right? So we get our 5 here, right? Let's just take that down a degree. So it's not likely. I mean, so certainly one possibility is we've completed. Okay, so if we make the assumption that, okay, it's 1, 2, this high probability, that's our 2, is it's perfect golden zone. We clear the 1, 6, 1, 8 window here. So that's our 3, ABC into the 4 here on a running flat, and we get 5 to finish. So this makes the assumption that, all right, per the way an Elliottician is going to approach this, I've got a completed impulse, so now I'm looking for a move back down here to right, just like this one. That's a pretty good fall for Apple. So you got to look at that and say, okay, maybe what's the alternative? Well, if we were going to come down to 90, so I mean, obviously what you're implying here per your count is, okay, I got 5, I got 3, right? So now this has to be the pivot, right? This can't, well, it could go higher, but now we're going to come down with a pretty big C here. So okay, let's think about that. So some of the tells that we have here. So note here the Vegas wave, right, is catching it right here. So you got to be careful about making assumptions, right? So what can we see? Right now this looks like a 3, but you could certainly, as I go down to a 60, you can see a scenario here where this could be a 1, 2, 3, right? So right now this looks impulsive, which is what you're anticipating. If this is going to trade as an A, a B, and we're going for a C, this is my force of habit. I put corrections in yellow. Okay, so we got a 5 up. God, can we get out of yeah, I mean, there's almost no way to get that into a 3 without really a bad force fit, right? So this is, now let's pull it up, right? So then, of course, we'd want to check coming the other direction. All right, so we're right in the golden zone. So I like your thinking here, because this would be a very low risk trade. So we could do the same thing. So of course, right, we get the exact, let's get this thing off. We get the exact same odds here on the short side, which is what you're implying based off of your count here. So we get a golden corner on the sell side. God, it's hard not to like it, right? So, I mean, taking that is, you're in the short term, you're counter trend, but the Elliott count certainly supports it, because this looks like 5, that looks like 3. So I like it because the risk reward here is so good, right? So if you're taking it right there, I wouldn't give that a whole lot. Max room would be the 786. Now you could go to the 707. Oh, where are you here? All right, if you want to keep it a little tighter, right? You just, being Apple, right? You might, the 707, not a bad thought here. 786 is going to give you the range here if we're going to come up and challenge some of this. You know that there'll be shorts that will be defending here. But right now, the question is, do we come out of the golden zone? Because we know, again, we don't have to wonder. It's a swing high to a swing low. It's a dominant to a golden zone. So we know an algorithm is already active there. They're defending. We don't have to wonder about it. We know it. So a move down here would take it to 109. Now you're looking at almost, damn near 10 to 1. And the kicker is, as you duly noted, right, well done to catch this, right, we've got the exact same odds as the last one we were looking at. Get that right on that corner. So I've got a golden corner yet again, right? So you look at that, and after listening to me trumpet about this being the highest probability trade in the market, which it is, again, there's almost no reason not to take that. The risk is so small. So you're talking about, if you're entering it, I would wait for it to break under, right? So if you're uncomfortable shorting Apple, which I completely get, you might wait for a little push to confirm we're coming out of that golden zone, and then a look for a retrace, right? To push back up and test it. And then if you're going to get a 3, right, something like that might be what you're looking for. Pretty good looking chart, right? I know it's uncomfortable to think about shorting Apple, right? At any time. We've got earnings coming April. They'll announce something here. So I'd be certainly laying out a roadmap here, a plan. I might do it in options. because with the market pushing up here, right? So the advantage here is the market has pushed up, which is a pretty good rip here. So calls will be expensive, puts will be less so. So you might do something at the money or slightly in the money because your risk is clearly defined. In an option, you might give it to the 786. So you're talking about an entry here if you're at the money, 134 with a stop at 139. I mean, very tradable, right? Even there, you've got 5 to 1. But I want to see it come out of that golden zone, right? That we're not just going to rip higher. Even if you use the 707, right? Now we're talking there's 10 to 1 just going to first target, right? On the assumption that we go A, B, and then we get a clean 5 to finish this as a C. Oh, did you put anything below? Okay, so the RSI got a little hot. You know, so this wouldn't be surprising to see the OBV is above the average, but now we're kind of flatlining here. This you got to be careful with this because all it takes is one push, and now you lose that divergence here. Same thing here, but what did we get to here? 86, plenty hot, right? So if you look off to the left here, right, when we get here, you know, get up into some of these upper zones, that's not surprising. So if that rolls over again, so you get a swing, you're almost getting it here in the RSI. Swing, retrace, if we head back down again, hard not to like that. But again, I'd want to see it come out of here. A little wick rejection up here. We get right on that. Show me a little, just come out a little bit. Again, just because it's Apple, right? You counter trend, right? So give me something like this and then come back. Right, so then I get that same probability here, but I've seen the confirmation that the algo is at, well, fuck, we don't have to wonder about whether an algo is active here in Apple, right? But that could just be the one of the C wave. All right, so there's lots of potential here. You sure as hell need to have a stop on it. And if you're trading options, you know, the classic mistake, you guys have heard me say this many times as I've traded as an option broker for many, many years. The mistake that most people make is they'll overstay the market. So there has to be a price point where if it breaks that, could be 707, could be the 786. If it breaks that, you get out of the option. The other is just as a rule of thumb is your option loses 50% of its value, you bail. And again, as a broker, I saw people do it over and over and over again. Well, it's got 60 days left on it. Let's stick with it and see what happens, right? And then then it's gone from 50% to 25%, and then, as is almost always the case, 90% of the options that are purchased expire worthless because people hang on for too long, right? Rather than being disciplined. Very common. It's easy to do, right? It's just human nature. Well, we got plenty of time. Let's see. Maybe it'll come back down. Maybe it's going to go to the 887. And that's where it's going to pivot. Well, of course, right now, the advantage here is that I've got an algorithm participating. If I get above this, I lose that sell-side algo. So it becomes less attractive here. You always want to try and get this algorithm, you want to be in line with what they're doing. So if this pushes too much higher, then I think you reevaluate the trade. So you can kind of play that out. Let's say we went to the 786, right? It's still a valid C wave as a proposed, because this is a 5, if we get an ABC here, this could be a 1-2 or an AB, doesn't matter. You'd still get the high probability off of the median lines, but you're losing the sell side participation of an algorithm, right? Which is the big negative, particularly in something like Apple. So I'd want to see it come out of here. That's just me. That's how I would do it. And, because the risk is so low here, I might even Texas hedge this. I might short it and then add a put as well, but then I might sell a call spread up here just to offset the cost of the put. So there's lots, you can be creative here about how you work with this. All right, so there's enough here. So I give you 2 for 1 here. So you got the Aussie dollar, which actually looks equally just as good. And then we've got a golden corner here on the short side in Apple. So your work, Pro 407, really well done, right? Great. And ballsy, right, to try and take you're just following, right, the wave principle, right? 5s and 3s, keep it simple. That's a clear 5, that's a clear 3 at this moment, right? Where of course, what you're always cautious about is if we start to come down, right? This is why the advantage of doing the retrace. If we start to come down, that certainly could turn into an impulse, right? And then you got a 5, and you're wrong, right? Then you're here, and you're looking at the buy side, saying, okay, well, I guess we're gonna have to somehow figure this out in terms of how we'd evaluate this as corrective. Right now, it doesn't seem like there's a way to do it without just a hideous force fit. That's a 5 all day. So I like this trade. Good for you, Pro 407. Ballsy. Like it. Okay, let's keep moving. Next up, I got Grant F. It looks like you're giving me the Dow. Okay, back in a sec. Okay, next up I got Grant F with a look here at the Dow Jones Industrial Average. You sent me a daily. So this is kind of interesting. Now, so you had some notes on this that I went back and I had to look at, that you were pulling this from the '09 low, and that you wanted to get perspective, we had to go to monthly and then put it in log scale. So let's do that so I can just get a glimpse of what you're thinking. So here, oh shit, we're going back, way back. So one, two, oh shit, this that's the low of 32. Yeah, we're getting way back. Well, there's no argument with the count, right? So 1, 2, 3. I don't think that would be in dispute. The ABC, here's the '08 low, right? The financial crisis low, and as you're noting here with the 4, largest degree 4. Switch to logarithmic monthly, which we've got here. Well, so at first glance, right? So this one thing that I'm always trying to encourage you guys to consider is simplify. You see, you're trying to be very creative up here, which I appreciate that effort. But there's a couple of flaws in your thinking. But that said, even still, given the background, right, and I know there's certainly some people that are blowing the alarm bells about being overvalued, the flood of liquidity. You've got some very big names saying that the market is way overdone and we should be expecting some sort of a significant correction. I think Ray Dalio is blowing that horn. You've got some big names that are suggesting it. Right, trying to, that's more of a macro approach to it. What we're trying to do here is just look at the TA and just stare at what's in front of us. Okay, right now, and I know you can't see that detail, those of you that are watching here. I don't see any reason why you wouldn't assume the simplest thing of all, right? So if this is a 4, well, that could be the 5, right? Why would we not assume that we're just doing a 1, 2, right? And that the 5 there's more to come. Now, of course, right, nobody knows what it's going to do. But given the framing here, I mean, it certainly is possible. It's absolutely possible that the 5 is in, right? And that, so, but think about what we'd be saying there, right? If the 5 is in, we're talking, right, that if I pull that up here, let me get just a measured move on this. We'd be coming all the way back to the 3-4 at the lower degree, right? So down 2 degrees to the 3-4 at the 50, that would put the Dow, right, even here in log scale, we'd be looking for a crash the likes of which, we'd never seen before. We were going to do that. So that seems unlikely. Of course, anything's possible. And I understand here that you're saying, hey, just an idea. Well, let's go look at your idea, because if we're applying strict Elliott, this is problematic. So let me, let's go to a daily here and look at this. I'm going to take it out of log so I can kind of break open what you're thinking. Now, the ranges that you're working with here, I see your thinking, but we got one flaw, and that is, so you were thinking possibly a triangle here as a kind of a wedge. Well, number one hard rule that you can't break, all right, is that you cannot have a triangle in the second. Right, so that we right off the bat we can eliminate that. Now, could it be something else? Well, so if you wanted to short this, you wouldn't be shorting this on the idea that it was that we were going into a triangle. Okay, so I'm not suggesting that this couldn't be a top. It just wouldn't be a top in the context of a 1-2. It certainly, if that were the case, it could be a top, but you'd be more likely to be thinking, okay, 1, 2. Off we go for the 3. It's a very low risk setup here. I mean, look at the risk reward you've got. It's 32 to 1. So, I mean, fantastic risk reward on the trade here to short it up here. And I'm not saying don't short it. You wouldn't be shorting it in the context of this being an expanding triangle into a 2. But this certainly, you could be shorting it in the idea that I've got an impulsive move here off of, well, here's the COVID low. We've got an impulsive move off the low, and I'd be looking for a retracement. Perhaps let's just keep it simple. I'd be looking for something between the 50 and the 618. Actually, we don't have that top yet. So something to come back down around here. Well, okay, that seems more reasonable. And then if we kind of look at all of this consolidation here and just kind of use that, Okay, that seems more probable to me as a 2, but of a 1-2 at the higher degree, right? So again, there's no need to get overly fancy here with an Elliott count until the market demands it. Right now, I've got an impulsive swing. I'm looking for 3 to correct it. So if you take this back and you say, okay, well, let's say we got golden zone. Well, now you're still at 13 to 1. Let's say we only got the 50, right, of a retrace here. We came back to this structure. So if I pull this over, right, we came down to challenge that structure. Well, that would be a front run on the 50, but you'd be coming back to all this consolidation. But look here, you're still got 11.85 to 1. So I'm not discouraging you from the short if that's what you're leaning into. Let's see here. I mean, we're kind of, shit. Let's see. Let me reset this. What did I do there? This is a little funky. Have you got this set? Let's see. Can I reset that? There we go. Okay, so you've got. I guess you have made your line separation invisible. So, oh shit. Here. I can't really work. Well, we can see we're up, we're overbought, right? We just this straight rip, right? So this is all, I mean, this is entirely Fed driven. So I'm not in dispute that we have massively manipulated markets. That's everybody agrees. Anyone who's in the markets knows that, right? This is all Fed driven. But they're not likely to make any change to policy unless there's a dramatic change. So I think at the most rudimentary level here, why fight the trend, right? If you got a retracement here for whatever reason that would cause it, I'd certainly be looking to be a buyer here. Right now, that doesn't mean that that's what's coming, right? That we're going to do this and we're going to come down here and then off we go. But until the market proves it, I got to swing. My first assumption is if we start to correct, it's going to be an internal retracement. There's no reason to assume that we're going to go external until we go external. This would be a gift, right, for the opportunity to be a buyer here in either of these. But that's a long fall. So something's got to spark that. Something's got to trigger that because we're talking about going from 34 to 26, right? So something significant has to happen. Again, I'm not saying that's not possible, but this in the context of just, okay, what's right in front of us? Impulsive, what am I waiting for? I'm waiting for a correction. I think that's off the table, right? I don't think we need to think about that. But I do think here as the 1-2 coming into this structure, I'd be looking to be on the buy side, not the sell side. Maybe to do something creative here with options if you're comfortable with that. I don't know that I'd be going just straight short on that in the futures market or however you might approach that. You do some options here, right? But again, keep that discipline. If it keeps going and you get beyond this level, the 1.414 looks like what you're doing here because we did it here, right? I see what you're doing. Interesting. The 1.414 is showing itself regularly here. So we got it here, we got it here, we got it here, we got it here, and that would do it. So the idea being here, if we tag that here, this potentially you get a reaction there. But so the reason I wouldn't discourage you from this is because the risk reward is so favorable, right? But be very disciplined on that stop. All right. I hate to differ with people, but I think right now you're trying to be too fancy. Swing, retrace, right? Until that breaks, I'd stay with that line of thinking. All right, but I like the creativity. I like the fact that you identified all the 414s, right? That's not something that most people would have checked. So well done on that. All right, I'd be careful about assuming the top is in. Okay, guys, I'm going to keep moving here. Well done, Grant F. I'm back. Oh, that's interesting. So Pro 407, so you did have the Aussie. All right, so it looks like we've already got that done because now I see you posting the Aussie. So something in the charts that you sent to me, it got it a little askew. So it looks like you did want to see that. Okay, let me keep moving here. Looks like Cato EW. So a few of you posted a couple of charts. Okay, that's great. I'll be back in just a sec. Okay, next up I got Cato EW with NIO. Now, this was a company I was not familiar with. So chart aside, I kind of was curious as what they're all about. So what I will often do, right, so just if it's a company I'm not familiar with, I'll go over to FinViz and look it up and say, oh, okay, well, it looks like they're auto manufacturers in China. Well, it seems to be. This is always a good place to get a good glance at it, but a couple of things I'll note in here. I'm kind of looking at analyst recommendations here. And then some of the, what's the buzz about it? Well, you can see this back on April 13th, 10 best stocks to buy in 2021, according to billionaire D.E. Shaw. Well, if he's a billionaire, I'm kind of curious as to what he's thinking. So if I come over here to his list, here's our billionaire. Best stocks to buy in 21, according to this billionaire, NIO is number 10. All right, so obviously he's done the fundamental analysis and is anticipating that this will be, a lucrative position to take in 2021. So let's come back here and look at this chart. Well, okay, so I kind of see you're thinking. This would be, it's not a clean 5 to really nail that, but again, this is one of those examples where I think you're overthinking it. So, as you have it listed, so if we're coming off the low, 1, 2, you're saying, okay, there's 3 and we're going into this complex 4 before we go up. Excuse me. So, okay, I got you, but let's just do a little comparison here. So this is the proposed 2, and the 4 would be, well, we'd have to get all of this in for the 4 to do it this way. Okay, certainly we'd have an alternation here, but I think this is just overcomplicating. I just, when in doubt, Elliott is always best when it's drop dead simple. Right? Now, sure, right, there are times where you got to complicate it, but that certainly looks more to me like that's the impulse that just completed. I know it's not perfect, right? Elliott is not perfect. You don't expect it to be perfect. But it just, the framing of the 4 to the 5 looks so much better to me than going through this all of this to suggest, oh, okay, well, I got an A, then I got a big expanded B. Now, yeah, I get you. Here's the 5. Interestingly, I would probably get to the same place, right? So I would, my view here, and Cato, I'm sure you've got this as an alternate, because you have this 4 here as a candidate, right? And possibly the 5 is in. So if it's me, I'm just doing this, right? I'm going, there's the 4, here's the 5, right? Which I see you have as a possibility. I'd put the 5 here. Okay, so if we do that, now we get 5 that comes off of it. Well, I'm going to end up in the same place here with kind of a simplified version here, because if that's 5 down, unless this ultimately holds, which I'm not saying it couldn't, you'd be anticipating, well, there's 5 down, that's likely the A. Right? If we're making a major correction here, then the 5 down would imply the A, the B, and then come down for the C. Well, okay, so if that's the case with our billionaire friend, I'm sure he can afford the drawdown. Whether or not he stays with it or not remains to be seen. But I think you can make the same play here on the idea that we've gone A, B, and now we're working into the 5 here for the C. Now, whether that turns out to be a bigger C and we end up into an impulse and this becomes, we're going to have to back ass into it in terms of how we're going to get this to be our correction. It's technical, right? So if we draw it up off of the low here, we go a little bit past the 50, so we're in between the 50 and the 618, exactly where you're expecting the second. But that's a rough fit to get that into a 3. So I like your thinking here, and I see you have this as alternates, right? That this could be you have A or 1, B or 2. I'm with you on that. I think you trade this long into the C, but I would be cautious about anticipating, oh, we're going all the way up to new highs. So if I'm looking at that, this would be a place for a partial. I would take some profit here. If you get a retrace, well, then you got to reevaluate and say, if do we get a clean impulse here, right? And then of course you're going to be mindful of the algo that will be on the other side, right? Which it looks like you might have already identified that or kind of made a point of being aware of that. So if we come back up, that we know, right? We don't have to guess. We know there'll be an algorithm sitting there to short it. Right now, just because there's an algorithm there doesn't mean it can't break, right? One side always breaks, right? So if we break through that, then I'd be a little bit more concerned about the idea that, okay, the correction is done and now off we go towards that target, because we know an algorithm's participated here and they have that as a target. Well, and you have it, right? So you do have it, right? You have it up above, right? Per this 50. I mean, a nice little trade. What'd you get there? So you'd get, I open that up, you'd get 5 to 1, right? So I like, I like your thing. You got 5 to 1. I like the thinking, right? Low risk. Well, I mean, you hit the inside here, the 75, right? You know, hover around the median line. I like it, right? I'm not suggesting that this count couldn't ultimately be what's there. I think that the trade here, to be in sync not only with our friend the billionaire, but with the Elliott count here, is to be long, right? But I don't know that I'd be holding on too much beyond the golden zone here for the possibility that this is just the A, B, and we get a deeper C, right? So you just got a big fib fight is what you have here. So you have one target down here. Well, you've identified both of them, right? So you do have these. So one target's down here, one target's down here. Who's going to win, right? We never know. What's the trend, right? Trend is up still, right? Short-term trend is down because of the 5. So there you go. Nice looking work. That's a company I've never heard of, but looks like there's a nice long. Whether or not it ends up going to target, either way, you got a nice looking setup here with low risk. So another one to keep on the watch list. All right, I'm gonna keep moving. I'll be back. Okay, Cato EW back for another one here with FireEye. So Cato, I see you posted a lot of charts here. So I chose this one here. It's kind of interesting here, and we exchanged some DMs the other day. I know you've really dialed into the Wolf range here, so I thought this was interesting since you're applying it here. So Wolf range is just range expansion, which whether it's members or YouTube subs, you've seen me use this many times. So what we're trying to do is we have it here in a 2-hour. We're just looking for that initial push, the initial swing, and then we can use that for range expansion here. So you can note here, we get this one's perfect, then we go all the way up, right? So let's move it back here. So if you start here, right, so let's do it this way. So note here, here's the swing. Now here's exactly 100% of that swing, right? So once you get the first one, then you move that up to this one, right? So this becomes your new 100%. Retrace to the 50, now we go to the minus 50 and to the minus 100, we get just through it. So it's not a classic Elliott approach to it, but it's just another algorithm that you see in the market all the time, right? So God knows how many of them there are, but this is just another one that is pretty obvious when you see it at play in the market here. So again, part of the tell is the fact that the first swing duplicated here, I mean, it's to the tick, right? Then retrace to the 50 and we go up to get it again. So that being established here, right? So well done to think outside the box to say, okay, well, if it's not perfect Elliott, and let's see what we got here, right? Here's our pivot here. So we didn't quite get the 1618. So it's good thinking to look, okay, what else could be there? What other algo could be in play? And I mean, certainly that's a very valid 3. It's just a straight rip up. There's not much subdivision in it. The idea that this is 1, 2, 3, 4 seems too deep. So I agree with you here. 1, this is your 2. There's the 3. We're working on the 4. Now you say blue 4 is too deep. I don't see your blue 4, right? Your colors get converted when you send it over. So, okay, so we've got the range expansion established. We've got the potential wave 3 target is here. God, is that your, let me put that in another color here. Okay, so there it is. Okay, I see what you're doing. Okay, so now you're doing the same thing here. Here's the swing, here's the retrace. We get just beyond the 6.5, and we come down to the negative 618. So second target here off of this original swing gets it within a tick or two, and then there's just the obvious, right? There's just here's the prior pivot node, right? It's right into a low volume node where we don't have market acceptance. So one of two things always happens: either it blows through it and it finds market acceptance down here, or it quickly rejects when you hit a low volume node. So off of that we get a swing, right? Now the same thing, right? You're doing the same thing here where we've got a swing, retrace. Certainly a valid 2. Now it looks like, hey, maybe we're starting in a 1, 2, 3 at the next degree. So let's see if I go to a 30-minute, we see that a little bit better. Looks like an impulse. There's a clear 3, and it looks like maybe that's 1, 2. So it could be 1, 2, 1, 2. We're pushing here, looking for the same idea to be in play. So I think very reasonable as a 4 off of that larger degree. We'll take this off just a little bit. So 3, kind of a sloppy. Not much subdivision in that 4, but the idea here that we found support really makes sense, and it fits with the Elliott count. Let me go to an hourly. It fits here, so no reason not to be bullish. Here you've got a 4-to-1 as a target. Let's see what you've got up above. So I'm assuming you're taking this. Let's get your count in here. So just using dominant to dominant, we're between the 50 and the 618, so we get a target up here, and there's your 5. The other thing you could do is just use a little geometry here. I'd probably do it like this. Okay, so we got the break, come back, test it. Now you'd anticipate that we start to go. Probably put a set of median lines on this as well, right? Just for that additional target. So we have a corner, as long as this holds, right? It's not a textbook golden, but we do get a corner here. Let's see if I can move that, just out of curiosity, off of the absolute low, because I'll check both. See how we hit here. We'd have to go to, so when I do this, it converts to what you have said. So there's the 38. So swing low to swing high, right to the 38. Now, again, we give you some higher targets. So classic Elliott, right, you'd pull from the 2. But I check both, right? I'm just looking for confluence, right? What else is there? So I got the 38 there. I'm off the 2. I'm between the 50 and the 618. I get a corner pocket. I got multiple targets up here for the 5. Very reasonable risk reward. I might even push that a little higher and say, hey, there's 7 to 1. Well, that's right. Again, great looking setup. So as I said earlier in the video, this is just another scan, right? You've got like-minded traders looking for the same technical approach, giving you a heads up on something. I mean, when's the last time you looked at FireEye? I haven't looked at it in months. So good looking trade. Now it just needs to get legs and get out of here. Volume kind of drifting off. So something, we got earnings on the 27th. Right, that's teed up, ready to go. Just needs some legs to get out of there. A little volume would help. Let's see what we got below. What do you got here? You got doing something unusual there. I'm not sure what that is. Is that an Elliott oscillator? Oh, I think that's a directional index. Okay, so you're certainly paying attention to some momentum indicators here to look for. You want, right? So you want the green to push beyond that to confirm you get a third. So if this is going to go 1, 2, it's time to get this to get legs, right? This needs to come out of here and start rolling. All right, well done. Okay, we'll be back in a second. We'll finish. Okay, back. I got all my regs really hitting the trads here, my regular trad traders. So Grant F back with, I guess you say Aphria. I'm assuming that's right. Cannabis company. Well, I'm a cannabis bull. I think legalization is inevitable. So I popped over here to FinViz just to get a look, right? So sometimes you can glean some things here. Interesting, Motley Fool. This was on my feed the other day, suggesting. They've got another company that they're interested in, but I think Aphria here looks quite good. Tilray and Aphria merged last year, so this is the Canadian cannabis play. Interesting, right? So the FinViz is always a good place to go and get some insight into just the general buzz on the stock, and then of course you've got analyst downgrades and upgrades here. But this is I'm always looking for what's the media buzz on this. So a pretty steep correction. So if we go back and look at this, Grant, you nailed it, right? So swing low, swing high. What do we do? Golden zone, right? I mean, is there an asset we have looked at today that didn't have either a 50 or a golden zone? It's just, this is, as I've said many times, I've done webinars on this. This is the DNA of the market, right? This is how the market moves. Swing, retrace, right? It's a swing. It's an internal retracement. If we hit the 50 of the golden zone, algorithms are participating. So as we look here, well, it kind of makes sense, right? You come back to all of this, right? Structure back here. We get some wick rejection here. We come right back to that. I put the volume profile on, so we drag it over, right? You can kind of see where you would anticipate finding some of that support. So swing up, down, golden zone, right? Now it's a little steep, right, for out on the daily here for the golden corner, but there it is nonetheless, right? So you've got your target up here. So if we're going, here's the, oh man, you guys, your color choices kind of surprised me. Okay, so here's the swing, here's the retrace, here's the 23, here's first target, second target. So you've teed this up on first target, getting to the median line, right? So here's the play, right? Right now, 80% odds. Best odds in trading, bar none, right? I don't know how many times I repeat it, yet it remains. The median lines, Pitchfork, remain the least understood, least utilized technical tool across the board, right? It absolutely astonishes me how few people actually use it. It's in every trading platform ever created. Maybe 5% use it, maybe. Astonishing, right? So here you go. We got 80% odds. Nice technical setup here. We know an algorithm's in, right? So this is just drop dead simple, right? Which is just how, when trading is best, it's not hard. Pulling the trigger, right? That's the hard part. Keeping your hands off the mouse. If that starts to go, right? That's the hard part. Oh shit, I'm up. Oh, I better. I don't want to give it back, right? That's letting it run. That's the hard part. Keep your hands off the mouse. Great risk reward here. Again, if you're looking for a trade, why would you not take that trade? Very low risk, excellent return, good technical setup. The industry's bullish. Yeah, I know it's deep retracement. But that is where you're looking for the retracement, right? If you teed it up and said, man, if this thing would retrace, where's the perfect spot I might look for? Well, you might have preferred the 50, right? Maybe we had the 50 here. Oh, Grant, let's see. Let's get the 50 in there. Oh, there you are. Okay. So that might have been ideal, right? Where you could play off of that structure. So maybe even here, right? So if you took a little bite at the 50, you'll often hear me suggest that. Take a portion at the 50, keep some in reserve in case we go golden zone, so right, that if it's going to be a 2, right, between the 50 and the golden zone, that's your high probability zone. So a piece here, ladder in down to the golden zone, stop underneath. Right? It's not complicated. It shouldn't be complicated, right? When trading is best, it's not complicated. You're not trying to, dig through a double zigzag. It should be, okay, here's the 5, here's the 3. Put a set of median lines on it. There's the Vegas wave right there for support. As you'll often find, the best trades are just the setup was so drop dead simple. A 5th grader could have picked it. Low risk, right? Now, having said that, remember, you're going to get stopped out far more times than you're going to hit target. Far more, right? That's what makes trading hard, right? People go, fuck, man, it was golden zone. I had the corner. I got stopped out. Oh, that shit doesn't work. That's the wrong kind of thinking, right? You take it 100 times and then tell me what your P&L is when you're setting up risk reward with that kind of upside, right? What you got to be careful of is doing this, right? It gets up a little bit and you take profit. Because, then what you get, right? That's the common mistake. People might, I got 1.6, but I don't want to give it back, right? So I'm just going to grab it while I can, right? This is just human nature. We're too quick to take profit, and we're too forgiving. Oh, well, I'm going to move my stop down a little bit, right? Because maybe it's going to come down here to the POC. Now look what you've got. Right, it gets up a little bit, you grab profit. It starts to break here, like, probably going lower, right? Probably it'll find some support down here. Look at all that structure. Oh, look, this looks like it was just accumulation down here, so I'm going to give it a little more room. That's the mistake. It's so easy to do, right? I've done it myself, right? I don't speak from textbook. I speak from my own experience. I have done that more times than I care to share. I've done that, so I know now not to do it. After 28 plus years of doing this, I've made that mistake so many times now, I don't make it anymore. All I'm trying to do here is keep you guys from making the same mistakes that most traders make as they go through their evolution, right? It takes time. It takes time to not go, oh, fuck, I don't want to get stopped out. I get the thinking. I get it, right? I've been there, been that guy. I've watched, I don't even know how many clients over the years. When I was a broker, hundreds and hundreds of clients say, and I would say, well, probably a better idea to get out. No, let's give it a little more room. That option is decayed, we're down 50%. Well, it's got, 2 more months. Let's just let it run. I've just seen hundreds of traders make that mistake. That's how I learned, right? Watching other traders, right? Who was making money, who was losing money. Right? Best thing about being a broker, I was able to accelerate that learning curve because I watched hundreds and hundreds of traders trade. What'd they do? Smart people, right? Often, very highly intelligent people can't trade for damn. They think they're smarter than the market, right? They get their ego involved. Your ego can't be involved here. Oh, I got 80% odds here, so I'm gonna let that rip. I know that's gonna be good because I got 80% odds, so I'm gonna load the boat here, right? As soon as you do that, that's the one that you'll get stopped out, right? I'm not saying trading's easy. That's not what I'm saying. But the technical setup should be so clear that you don't hesitate. This is an easy trade to take. It's not hard to take that trade. Clear exit, clear target. You pull the trigger. Great odds. But have your damn stop on it. All right, let's see how am I doing. Okay, well, okay, we got Apple. Okay, Cato, I covered you pretty well. Oh, I got eighth and T down here. Okay, I'm gonna wrap up. We'll do one. All right, we're gonna finish up here with eighth and T and Ambev. Now, before we get into this stock, let me just make this comment. I say this both to members as well as any YouTube subs that are watching here. Eighth and T has become one of our most successful traders. And what's interesting about Eighth and T is when he joined us, I think it's been a couple of years now, he knew very little about trading. And what's interesting is that what he did when he came in here, and I think this is often why people that come in without preconceived ideas end up having the best result. Because he didn't know and didn't have any bad habits to overcome, he came in and he just applied what we taught him with incredible discipline. So to the point now, when he posts a chart, I almost have to do nothing. There's very little that I would need to do because he's applying exactly what we've taught him. He's become a very successful futures trader by just focusing on one particular trade that we taught him that he applies now, I mean, day in, day out, and has incredible success with it. It's not complicated. It's a trade we taught him, but he just took it and made it his own. It's now, I mean, he probably has more success with that than any other trader in our futures trading room because he applies it with discipline. Same thing to all of his technical analysis. It's always just picture perfect. Again, there's so little that I have to do. I mean, I almost could just say, oh, looks great. Okay, it's a buy. So note what we have here. So here's the 3 day. So we're looking long term. So first I should say, I didn't recognize this company. Never heard of them. So as I will often do, I go over to FinViz and look around and say, oh, okay, so it's a Brazilian beverage company doing beers as well as other beverages. Kind of interesting mix here. And I thought, okay, top beer stocks for 2021. So I figured I'd give a look here and just kind of see what the general buzz was here. So, you know, best value stocks. Here's Ambev here with their trailing PE over the last year. Not bad here. So, I mean, certainly got good numbers, but then you come back to the chart and you go, wow, that's a pretty good sell-off. I mean, again, we're looking at a 3 day chart here. So this is, I mean, what are we doing? Where's our top here? 2013. And we're putting in a low here, 2020. Is that the COVID low? Yeah, it is. So here's the COVID low, right? So over a 3 year period, it looks much different, right? So this is the first thing that attracted my eye was like, how'd we do here on the length of the W to the X? Well, we just missed the 100. We're a little deep here, but there's some interesting technical things coming along the way. Let me pull that off here. Now, what's our range here? Well, so we're going from 24 cents up to just shy of $10 here. So again, very clean Elliott, as he always posts. So we get a nice leading diag, right? 5 longer than 3, 3 longer than 1. Beautiful leading diagonal into the 1. 707 on the retrace, the square root of 50. Right? So nice, common, right? If it's not going to hold the golden zone. 707 is a common target. We see that retrace right here. Often we'll use that as a stop out point a few ticks under the 707. So if you were looking for that, you got it. Now you get a very skinny 2 here, but there's really no other way to count that since it's so shallow. So you can kind of look at it and go, okay, well, all of this seemed to come into play as we had the rejection here, came back, now kind of becomes support. It's shallow, right? So that's not a trade that I would have caught, right? If I was watching that, I'd been looking for it lower. So perhaps you missed that trade. I would have. But up we go. Okay, 1, 2, 3, 4, 5. Well, now I know where I am. I've got a 1, 2, 3. This is, I mean, classic triangle. Looks like A, B, C, D, E into the 4. So I'd put the 4 there. I mean, you could do A, B, C here and then 1, 2, right? Either one, right? It's just very 4-ish. Up for the 5, that caps the 3 just beyond the 200. 23.6 for the 4, up for the 5. Okay, so I've got a clean impulse to complete it. Well, now, right, if we're going to go from the low to the high, and I bring this up here, well, that's pretty deep, right? We go 786. So this is a deep correction. Oh, the only thing that I might add here is the volume profile. I'm going to go with visible range here. And let me tweak that just a little bit because I always figure that's I don't need those big bars. Okay, let me bring that in here. So, okay, we come all the way down here. We actually went below this value area here. So deep, right? So this is, you might have been looking for it right here. So swing low, swing high, right to the golden zone. So this is a good example, right? So you've been sitting right here thinking, hey, I got a golden corner. Well, it's a little funky, right? So you probably had been thinking AB because that looks more like you'd have finished with a 5 down here, but right, it rolls over. So I'm glad that here's an example. So here's an example where you look and you go, hey, I thought I had 80% odds here. Yeah, you did, right? 80% odds as long as that pivot holds. Now, if it breaks, that doesn't mean we abandon the trade. That means we come down, we're going for a lower pivot, right? Still valid, right? Ultimately, we get to a point where if it keeps going, right, obviously, right, it's not valid anymore. But right here, we're still valid. We just don't have a golden corner. We still have a corner. So that 80%, again, assuming this holds, that 80% is still in play. Right? You just didn't get the golden corner. Now, what you don't have here is an algorithm behind your back. So what you ideally need is to come out of this and then get something like that. That's the safer trade because now I can get an algorithm participating, right, for something like that to get there. So now we would come off of the 3-day and say, okay, I got a pivot. The WXY makes sense, so I can see the ABC here to finish it, right? So you'd have to go ABC into the W, ABC into the X, ABC into the Y for the deep 2. All right, now if we're starting back up, let's just go to the daily and see how we look. Okay, 1, 2, 1, 2, could be. So for me, I'd want to let this get a little further developed. Oh shit, I didn't mean to move that. I'd want this to get a little further along, right? So let's push all this off, right? Because you're trading out here on a 3-day. Things happen very slowly. Okay, so maybe, right? So also could be corrective and it could be going lower. But right now, 1, 2, okay, you can't. That's really, if you're a bull, that's the bull count. It would have to be 1, 2, 1, 2, right? These are kind of deep. So again, 7, 8, 6. So what we're essentially doing here is we're trying to build a base, right? So, all right, if this is going to come out of here, you can just look at the volume profile and say, okay, all right, lots of volume down here. So market acceptance, bulls and bears, right? Trying to battle it out. So this needs to come out of here. For me to want to take this, I would want to see this come out, and then I'd be looking for the retrace. So if this is going to come 1, 2, 3, I'd be interested in the 4, 5. But even still, and I'm still out here on a daily, if it's me, I'd be looking for something like this. I'd be looking for that. I'm going to pull some of this off here. Right, remember there's going to be an algo on the other side, right? So what I need here, what I want to see is I need to get to a place where I can get an algorithm behind me. Right now, these are too deep. Let's see. Actually, let's just check that. It looks like it might be too deep. Nope, there it is. Okay, so remember, if this one breaks, right? So if you were here to here and we break, and then we go here to here and we break, you simply go back to the lower pivot and look, voila, look what we get, right? So if I go to the higher pivot and then come down, perfect golden zone. Right, so now it looks more interesting to me. Perhaps a little divergence here. We get a lower low in the RSI, but now we don't match that. It looks like we can start to go. So just this, right? So it wouldn't be in an Elliott context, although I suppose it could be an ABC into a 1, right? So you could have a leading diag starting. So the possibility here, if I'm going to just take that off, Ethan, right? So possibly we go 1, 2. Right now, we would look for that diag to continue to stay in that 3-wave structure. So it's a contender. At a smaller degree, now you would have a golden corner. If I get this right on the pivot here, get it a little tighter. Let's get this on that pivot. Okay, so now let's get it right on it. Okay, so now we come right to it. So, okay, maybe it's 1, 2, 1, 2. Remember, an algorithm doesn't care about the Elliott count. That's just us trying to figure out, is there a pattern here that's prone to repeat? Well, okay, I know an algorithm's participating here. I don't have to wonder about it. I know it, right? So here they're coming off of this. Where's their target? Right here. So if this is going to go ABC, well, now I'm looking for an ABC to come out of here, right? So if we're going to stay with a diag, right? So we're trying to play the 1, 2 of a leading diag to come out of here, right? We don't know what's coming out of there, right? You're kind of making a guesstimate based on what you can see. The one thing I do know is that there's an algorithm participating here. So now at least I've got an algorithm behind my back if I want to take this trade. Now maybe it goes 1, 2, 1, 2. We don't know, right? Again, algorithm doesn't care about the Elliott count. Does not care, right? It's just working swing high to swing low, right? So see, I've taught this before. Algorithm does not see this, right? They don't see the alternating pivots, right? Once that breaks, the only thing the algorithm sees is this, right? It just sees a swing high to a retracement, right? First target, second target, third. Now, if we get a third target, well, now we know, hey, okay, well, it looks like perhaps, we get an impulsive move out of here. This is just speculation. Could be 1, 2, 1, 2. Could be an ABC of a diag. We don't know. Until it reveals itself, we don't know. But I know I've got accumulation. I've got plenty of volume down here. I've got a technical pivot. I'm coming off of a corner here, not a golden corner, but I got a corner pocket. So as long as this pivot holds, what have I done? I've just gone up. I've come down to retrace the corner. Now I need to come out of here. Right? We got to get out of this consolidation zone. So would I take this trade? Yeah, I would. I don't know anything about the company, but just looking at a chart, I mean, a chart's a chart, right? So everything, right, remember the technician's premise is every known fundamental is factored into that price at that moment in time. So you don't really need to know, although I kind of like to know, right, what's the general consensus on where the stock is headed. Long way back, right? It's pretty deep correction as we note here on the 2 of the Y. Pretty deep correction. So I want to see this start to show some legs. So really, unless I was just in love with the company, I'd want to see maybe a test from above. Then I'd be a little bit more enthusiastic about this. You've got to come out of this. Right, this little accumulation. Now, well, note here, if we can get legs and come out of here, we have very little resistance here until we get up to the POC. Right now, this is visible range. So if we get up to here, okay, now I'm looking for the next retrace. This should be easy to blow through. Now you'll have some resistance here, right? Shorts will be trying to defend it. So that can be the fuel. So if indeed, right, if heavy emphasis on if we come out of here, right, there's first target off of the golden zone. Now, if you're going to get second target, you can anticipate there'll be resistance there, right? Now, but you got to hit if those stops get hit, that's the fuel that can take it higher. All remains to be seen. Earnings looks like May 6th. So you're buying the accumulation here. That's really what you're doing, right? Stop. I'd use a stop under this pivot. I don't know that I would give that a lot of room because this could just go sideways for a while. So it's a question, are you willing to park some capital here? If we could do this, right, bounce around, come back. We could bounce around for a while. Accumulation, but I got a technical pivot, good to go, right? So if you like this company, very reasonable. Okay, I'm going to wrap it there so this thing doesn't go for 3 hours. Very well done, guys. Excellent. Everybody today, really nice looking work. Really excellent. All right, so if you're watching on YouTube, this is the way we do it, right? So we're going to give you guys on YouTube an opportunity to participate. You should look for that in the next couple of weeks. We'll start doing these on a regular basis, at least a couple of times a week, where we'll live stream it. And if you have things you're interested in having us look at, we'll make that a possibility. All right, guys, with that, I will wrap it up. Tomorrow, you've got Monte Crypto with his approach, which is very different than mine. So I mentioned that so people understand it's not just Elliott Wave is not the only thing we do and just algorithms and just geometry. He has a unique approach to it based on longer-term support and resistance levels that's very, very effective. So particularly for those members that don't immediately embrace Elliott Wave or don't have their skill set there yet, it's a way to participate in the markets that is very appealing as you develop your skills with Elliott Wave analysis. Okay, with that, I will wrap it, and I guess I'll be back on Friday to talk to you guys about Bitcoin. Okay.